Though it seems like a cold shower in the face, there are reasons to be positive about the stock market in the coming days, weeks, and months. Throughout the first several weeks of February, the market has been rising, overcoming concerns about rate hikes, inflation, and Omicron. Early in January, the price of Tesla stock was above $1,200 a share, almost exactly at its all-time high of $1,234.31 and 49 cents. Wall Street, on the other hand, seems to think the stock is valued at about 100 times Tesla's earnings per share. That is roughly 10 times the value of traditional automotive stocks, but according to one valuation approach, that sounds about fair. Wall Street is growing increasingly positive about Tesla stock, but given the worry of rising interest rates, analysts' increased optimism hasn't been enough to drive up the price. Would the value of Tesla shares in the future match everyone's expectations? To find out, keep watching. With the buy rating, Goldman Sachs analyst Mark Delaney raised his price objective for Tesla stock from $1,125 to $1,200 in January 2022. Tesla was listed by Delaney as a top choice for 2022. He considers Tesla's stock to be the best concept in the electric vehicle industry and puts it in the outperform category. Similar to Jonas, Delaney highlighted Tesla's leadership in electric cars and added that the company's sales may benefit from trends in the adoption of electric vehicles throughout the world. Elon Musk, the CEO of Tesla Incorporated, has informed staff members that, should they do well, he concurs with the Cathie Wood-led ARK Innovation ETF, which values Tesla at $3,000 per share. Cathie Wood stated in a recent interview that she bases her Tesla investment at $3,000 per share. Our estimate for Tesla's success has gone up, she stated. Their market share is the primary cause of that. Therefore, from the end of 2017 to the present, it has actually increased pretty considerably rather than decreasing. Despite the impending onslaught of electric cars from Ford, General Motors, and Toyota, well-known investor Cathie Wood continues to be quite optimistic about Tesla, one of her long-term favorite businesses. Wood's asking price for Tesla, though, could seem exorbitant. To hit that price target, Tesla's share price would need to rise above $300, as it is now trading at $860. As early as 2025, ARK Invest predicts that Tesla will deliver 5 to 10 million cars. Additionally, it claims that Tesla will launch Tesla Network, a fully automated ride-hailing service that will generate significant revenue with a large profit margin. Musk emphasized ARK's revised $3,000 price target in an email to Tesla staff that Electric was able to get. He also stated that he agrees with ARK's analysis. If we execute really well, I agree with ARK Invest, Musk stated. Tesla would be the most valuable corporation in the world at $3,000 per share, valuing the company at $3 trillion, at more than $730 billion. The car maker is currently the most valuable automotive corporation in the world. Musk has discussed the price of Tesla's stock frequently. Musk spoke to his Twitter followers on the eve of a new high for Tesla shares last year, saying, Tesla's stock price is too high, MO. Elon Musk and the board of Tesla were sued by an investor who claimed that the CEO's erratic tweets violated a settlement he had with the U.S. Securities and Exchange Commission. Tesla's market value dropped by more than $13 billion as a result of his remark. Less than 5 of ARK Invest's holding in. Tesla was sold in September as the company's shares increased in value. AT100 shares overall valued at approximately $5. 76 cents million were sold. Now, though, as the price of Tesla stocks keeps falling, Cathie Wood has begun buying them all at once. One of Wood's most closely watched innovation-focused ETFs is still Tesla. For instance, at 10.49% of the ETF's holdings, Tesla is the top holding in the company's flagship ARK Innovation ETF. Wood continued by saying that Tesla's strategy would only be validated by the new EVs from the more established automakers. Furthermore, Wood expressed optimism about the Chinese market's prospects for EVs. The market is starting to show signs of life for Tesla, breaking a 2-day losing run. As of February 14th, Tesla stock was up 3.1 in reaction to an optimistic report from investment banking Piper Sandler. Piper Sandler decided to show Tesla some love on Valentine's Day, as reported by StreetInsider.com. The investment advisor reiterated its buy recommendation on the stock and increased its price target to $1,350, suggesting that new investors may experience a gain of up to 55% on the electric vehicle company's shares this year. According to Piper, which updated its valuation to take into consideration revised estimates, deliveries, capex, and margins, it now expects Tesla to produce more cash in the future, increasing the stock's value. Adam Jonas of Morgan Stanley may have said that Tesla was leading the electric car race at the moment. He wrote, "Consider the EV race as a marathon. At mile 21, Tesla is leading the race. Everyone else is still tying their shoes or is at mile 2. As the marathon goes on, Jonas said that Tesla's position will only get stronger because the company has just seen record deliveries of its vehicles. In addition to raising his price target for the automaker shares from $1,200 to $1,300, he also estimated that in 2022, there will be roughly 2 million deliveries, with hopes to expand that number by 50% this year. Tesla delivered 936,000 vehicles last year. Analyst enthusiasm for Tesla shares has been mostly driven by the company's operational proficiency. As traditional automakers faced with supply chain constraints and semiconductor shortages during the pandemic, Tesla rewrote its software to switch between vendors and keep its factory operating. In order to increase output, it also opened 2 additional manufacturing sites in Berlin and Austin. These establishments will strengthen Tesla's positions in Fremont, California, and Shanghai. First time they're taken as a whole, the innovations result in higher operational margins and manufacturing scale for its cars. We anticipate that Tesla will eventually reinvest these increased gross margins, which are possible thanks to the launch of the Berlin and Austin plants, into the growth of its product, service, network, and price. The company's automobiles are already among the top sales in a number of nations, including Norway and the United Kingdom. Even though Tesla has a lot of potential problems that we may see come to pass in the future, the company still has a long way to go before reaching these incredible heights. Even though Elon Musk will undoubtedly succeed, it would be interesting to observe how they resolve these issues. First off, even with hefty government incentives like tax cuts for alternative technologies, Tesla automobiles are still excessively expensive. The starting price of Tesla's Model S, which is $94,990 before any incentives or reductions, remains prohibitive for potential buyers. Even the new, less expensive Model 3 from Tesla costs $43,990 before taxes, incentives, and gas savings, a price that most drivers will never be able to afford. In addition to being pricey for buyers, the cars are expensive for Tesla to produce. According to Gordon Johnson, analyst at Vertical Group, the business lost around $14,000 for every Model 3 vehicle it sold in 2018. Though if the business grows, these numbers might get better. Another possible problem is that Tesla can run out of energy sources. Lack of batteries to power their devices was one of the first issues Tesla executives faced. Tesla is hoping to resolve its battery dilemma with the completion of its much discussed Gigafactory, which is now under construction in Sparks, Nevada. With a projected footprint of more than 1.9 million square feet, the lithium-ion manufacturing facility is expected to contribute to the yearly production increase of more than 500,000 Tesla vehicles. It is unclear if the Gigafactory will be finished on schedule because large-scale projects like these are frequently beset by administrative or legal challenges. The Gigafactory has received approval from the Nevada government and is predicted to generate an additional $100 billion in economic activity over the next several decades. Additionally, there's more competition for electric vehicles. In the upcoming years, Mercedes-Benz, Volkswagen, Subaru, Ford, and BMW are among the other corporations that intend to join the electric vehicle industry. This could lead to some competition for Tesla's market share. Corporations might also get involved. Both Google and Apple Incorporated have stakes in the automotive sector and think they can compete with Tesla in that space. It is true that companies with larger current customer bases worry Tesla. Although Tesla still has a long way to go, it's fortunate that they are already much ahead of their rivals. If you currently own a Tesla share, you could be sitting on a sizable sum of money. What price do you think Tesla shares will eventually reach? Please leave a comment below.